You ever wonder how a billionaire like President Donald J. Trump pays only $750 in taxes? Well, on today's episode, we're gonna break down how taxes work. Let's talk money.
All we talk is money. All we talk is money. All we talk is money. All we talk is money.
Welcome to Soz Talks Money on Valuetainment. I'm your host, Adam Sosnick, and I'm here to help you build your wealth and save that money. On today's episode, we're gonna break down the tedious topic of taxes and make taxes great again. Now, I know what you're thinking, taxes, oh my God, you're gonna bore me to death. But the whole goal of today's episode is to actually make taxes somewhat fun and palatable, because who likes paying taxes? Not me, not you, not President Trump. Nobody likes paying taxes. So on today's episode, we're gonna explain taxes for dummies. Now, let me start off by saying this. The United States tax system is complicated AF. So the whole goal of today's episode is to break down money and taxes in a language that you can understand. Now, jumping right in, you might have seen in the news in the past few weeks, Donald Trump apparently has only paid $750 in taxes for the first 2 years of his presidency. What? How did that happen? Well, let me tell you. Now, according to the New York Times, again, this is according to the New York Times, Trump avoided paying federal income tax, and this is how that happened. Now, whether you're a fan or a critic of Donald Trump, let me tell you this. There is nothing wrong with utilizing the tax code to one's benefit. Okay, let me say that again. There's nothing wrong with utilizing the United States tax code to one's benefit. I hope you're doing so yourself. So as an example, your goal should be to reduce your taxes and pay as little as legally required. So that's what Trump did. What did Trump do? He reduced his taxes by depreciating his real estate. If you're a real estate investor, you understand the concept of depreciation. That's why real estate investors love debt and love paying low taxes, because they depreciate their real estate investments, and they also deduct their losses. Now, again, if you're a fan or you're a critic of Donald Trump, he did have a lot of business losses, and that's how he wrote off his losses to deduct his taxes. That's how that worked. P.S. He probably also hired some of the best CPAs and accountants that money can buy. But that, in summation, is basically how Donald Trump avoided paying federal income tax. Now, talking about taxes, let's get into the history of taxes. Now, taxes didn't just come up in the last 100 years. In fact, they've been here for thousands of years. In fact, in ancient Mesopotamia, 2500 BC, that's where taxes started. Now, you weren't paying money. You were actually paying livestock or different products or fruits and vegetables you would have to pay in taxes. That's how taxes started 2500 BC. Now, welcome to America. When did taxes start here in America? You might have heard of something called the Boston Tea Party. What was the famous phrase from the Boston Tea Party? Well, it was no taxation without representation. That's how that started. Then all of a sudden you had someone called Benjamin Franklin who came up with the famous quote, there are only two certainties in life. That is, number one, death, and number two, taxes. You might have heard this before. I'm going to spare you the history lesson right here, but basically it came down to this. Supreme Court Justice Oliver Wendell Holmes, he's your Holmes, he's my Holmes, he said, taxes are what we pay for a civilized society. Speaking of a civilized society, why do we all pay taxes? What is the purpose of paying taxes? I know some people out there is like, why am I even paying taxes? Well, let me explain to you. The government uses taxes for the well-being of society. Here are a couple different examples. Taxes collected from individuals and corporations by the city, state, and country go to the following. Public safety, that's cops as firefighters, respect to them. To build and repair infrastructure. You want to have streets you can drive on, right? You want to have toll roads and places where you can go. That's part of taxes. Agriculture, to fund education, to pay for defense, to pay for public transportation, for public health. We're dealing with COVID right now. It's a public health crisis. Taxes help combat stuff of that. Disaster relief, environment, right? You got funding the benefits of government workers, food and housing for the poor. And last but not least, every one of us that gets a paycheck has a FICA tax taken out of their paycheck from their employer. That's 7.65%, and that goes to funding Social Security and Medicare. That's how that works. So that is the purpose of paying taxes. Now, speaking of taxes, we got three different types of taxes. Tax type number one is a regressive tax, aka a sales tax. And let me tell you something about a sales tax. This typically affects lower paid workers unproportionately. Let me back up and explain why that is. So everyone has to go grocery shopping and paying taxes for shopping, tolls, driver's license, if you want to go get a hunting license, you have to pay taxes, you have to pay fees. So let me give you a little comparison here. So someone that makes $25,000 a year versus someone that makes $100,000 a year. $25,000 versus $100,000. Now, if someone who makes $25,000 pays $1,000 a year and all those types of taxes we talked about, that is 4% of their income. Now, versus someone who makes $100,000 a year, if they pay $1,000 in taxes, that's only 1% of their income. So now we were talking about this regressive tax or sales tax. That's why it affects lower paid workers unproportionately. That is a regressive tax. Number two, the second type of tax is a proportional tax, aka a flat tax. So here's the deal with the flat tax. This is where everyone pays the exact same percentage of your income. So you might have heard of someone wants to recommend a 15% flat tax. Like, enough with all this regressive or progressive tax, let's just pay a flat tax. Everyone pays the same. Well, in fact, 9 states actually currently impose a flat tax on their state income. And then the last type of tax is a progressive tax. This is currently what the United States uses for their federal income tax. That's a progressive tax system. Now, who does that typically affect? That actually affects the rich who make more money. The more you make, the higher the tax bracket, which we're going to get into. So this allows lower earners to pay very little in taxes. Now, speaking of taxes, let's talk about the marginal tax brackets here in America today. It's 2020. We're going to talk about marginal tax brackets. We're going to throw up a little graphic on your screen right now so you can understand what I'm talking about. Now, these are the marginal tax brackets here in America today. Now, there are a lot of numbers. Now, let me tell you something right now. I'm not going to read off every single little number and every little detail here, but I will give you the big picture recap on how marginal tax rates work here in America today. So the less you make, the less you'll pay in taxes. The more you'll make in a progressive tax system, the more you'll pay in taxes. That's how that works. So if you make between $0 and basically $10,000 as a single person, you're only paying 10%. Same thing. So right here you have single on the left, married on the right. There you go. So the 7 different tax brackets, or 7 different buckets or brackets that you're paying in America today, depending on what you make. I'll give you those 7 right now. You got 10%, 12%, 22%, 24%, 32%, 35%, and the big dog, big earner pays 37% in taxes. That's if you're making over $500,000 a year in federal income. So that's what you can see on your screen right now is the marginal tax brackets here in America today. The more you make, the more you pay. Now here's the point. Not everyone pays specifically 37%. So for instance, if you make $518,000 a year, kudos, respect to you. You don't pay 37% flat tax, right? We talked about this being a progressive tax. So your first $10,000 is taxed at 10%. Your next $30,000 to upwards of 40, you pay 12%. Then your next amount of money you make up to about $85,000, you pay 22%. Then the next amount of money you make up to $163,000, you pay 24%. Upwards and onwards to 32%, 35%, 37%. So the more you make, you go into a different tax bracket. That's why it's called the marginal tax bracket. So most people, unless you're making under $10,000 a year, are going to be in at least 2 tax brackets. So again, your first $10,000, if you're single, is taxed at 10%. Then you move into the 12%, 22%, 24%, so on and so forth. So again, I'm trying to not make these tax numbers and giggity things too complicated. I'm trying to break them down. But understand, the more you make, boom, 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 you move up into a higher tax bracket. Now, someone might say, hold on, the more I make, the more I have to pay in taxes. Why would I want to make more money? Well, listen, my friend, that's the type of attitude that will leave you broke and caught up in this first or second tax category. So the more you make, the more you'll have to pay in taxes, I understand, but that's why you pay CPAs and accountants to figure out loopholes or tax deductions or tax benefits that you could utilize to pay less in taxes. So there's something called the standard deduction that you could use, or there's something called the itemized deduction. I'll let you deal with that with your CPA. Just understand that there's something called the standard deduction. That's $12,400 for an individual, and that's $24,800 for a married couple. Or if you don't want to choose that, you can use an itemized deduction. Now we're going to go over a couple key facts and key terms that you should understand when it comes to taxes. First and foremost, according to the Tax Policy Center, as many as 45% of tax filers pay no federal income tax. That's a crazy number. Federal income tax, that is the largest source of revenue for the government. That's how they get their money to pay for everything. Last but not least, the average income tax refund was a little over $3,100. Now, here are a couple key terms you might want to know when speaking with your accountant, so you just understand the name of the game when it comes to taxes. Number one, a tax break. A tax break is a deduction, exemption, or credit that reduces your taxes. A tax benefit is a savings for a taxpayer that reduces your taxes. A tax bracket, which we covered earlier right here, boom, tax bracket, that's the rate at which you're taxed, which we talked about, 10, 12, 22, 24, 32, and so on and so forth. Marginal tax rate, that's exactly what we just covered right there. That's the rate you pay on an additional dollar of income. The more you make, most people are in more than one marginal tax bracket. Hopefully you're above one tax bracket. Moving along, we got the effective tax rate. That's the actual percent of your income that you pay in taxes. Tax deductible interest, that's the borrowing expense you can claim to reduce taxable income, i.e. your mortgage interest or student loan payment. Then you got AGI, this stands for your adjusted gross income, which is basically your gross income minus your adjustments to income. And then last but not least, you got a W-2 versus the 1099. So more than likely you're either a W-2, aka an employee, or a 1099, an independent contractor when it comes to income. So that's it. That's tax facts and key terms that you should understand. Moving right along, let's talk about the Robert Kiyosaki cash flow quadrant. We'll move real quick with this, but there's something called the ESBI. There's 4 levels of making money, 4 levels of income, 4 levels of taxation. Number 1 is an employee. Basically, you work, you're an employee, you get paid for your time, and the amount of work determines your income. This is the basic level of getting taxed. You have no control over your taxes. You get your W-2, that's how you work. And then you're self-employed. This is usually a 1099. This also, the amount of work determines your income. Then you have a business owner. Their income does not depend on active work. This is on the passive side of the equation. If you're a business owner, you get corporate tax breaks. As you might have known, Donald Trump has reduced the corporate tax rate from 35 to 21%. This is how Donald Trump was able to write off his debt. There's definitely tax benefits to being a business owner. And last but not least, you have I, which your income does not depend on active work. This is being an investor. Your money works for you, and if you have to pay taxes, you have to pay capital gains tax. Well, traditionally, long-term capital gains tax is way less than paying ordinary income. So that's the ESBI cash flow quadrant by none other than Robert Kiyosaki. We'll attach a link so you can check that out. But this is something to wake you up when it comes to taxes. I remember reading that when I was like 23 years old, being like, dude, I got no clue what this guy's talking about, but I need to understand how taxes work and how I get taxed on the money I make. Last but not least, let's talk about state income tax, because everything we've talked about so far has been federal. Federal, the government taxing you federally on your income. Now let's talk about state income tax. So there's a difference between income tax and federal income tax, right? State income tax is different. So depending on where you live, you might have to pay a certain amount of taxes. So I'll give you a quick rundown of the highest taxed states in America. Number 1, first and foremost, is New York. That's why a lot of people are moving out of New York right now. You got New York, Maryland, Oregon, Ohio, Kentucky, Minnesota, North Carolina, Massachusetts, Hawaii, and Wisconsin. And everyone who has walked in and basically said, dude, what are you shooting today? I was like, oh, taxes. They're like, where's California on this list? I'm shocked California's on this list. Well, according to this list, California is number 13 in highest paid state taxes. Something tells me they're on the way up. Last but not least, what states have no income tax? What states have no income tax? I'll tell you right now, there are 9 states. 9 states. New Hampshire, Tennessee, Texas, Alaska, Nevada, South Dakota, Washington, Wyoming, and my home state of Florida. So the question is, where do you want to live? Depending on where you live, depending on what state you're at, depending on your income bracket, is basically how taxes work. So that's it, guys. That's this episode on taxes. Now, I know we covered a lot of territory, the history of taxes, breaking down different tax brackets, the highest states. We covered a lot of ground, and I hope you appreciate all the stuff that we covered today. I know that this is not easy stuff. It's pretty complicated stuff and typically pretty boring stuff. So I hope that I made this a little fun for you to watch. I got to tell you something. This was not my comfort zone. I stepped out of my comfort zone to do this episode so I can get smarter with taxes and so you can get smarter with taxes. Again, I'm not a CPA, but I said, you know what, Trump's in the news, there's so much stuff going on with taxes, let me understand this better, so I hope you understand this better as well. With that being said, if you have not seen my episode on how to win the interest rate game, check that out right here. And if you have not seen my episode on how your money should flow, check that out right here. And if you have not subscribed to Valuetainment Economics, do so below and give that like button a smash to help out the algorithm. And last but not least, the whole point is understanding taxes so you can pay the least amount of taxes as possible so you can save that money.
All we talk is money. All we talk is money. All we talk is money. All we talk is money.